Welcome. This is Dustin Pass, and today you have an opportunity to get your hands on TomZA. That isn't always easy to do as it's rarely available, so you're in luck. This is the software that has the Forex community buzzing because it was never created or intended to be sold to the public. It was actually created by a friend of mine, Tom Flora, a former professional Forex fund manager, in order to use on his managed accounts. Now, Tom also happens to be the CEO of a Forex brokerage, so he knows what he's doing when it comes to the Forex market. Now, today we're going to take a look under the hood of TomZA to learn all the ins and outs. Then, we're going to go over the historical performance of this incredible software. And then, of course, we're going to share with you exactly how you can get your hands on it. Now, as I said, Tom Flora used to be a professional fund manager and a very good one. He spent years developing this software to make him and his clients a ton of money. So this is tested under real-world conditions, all right? We're not going to show you any back tests because back tests are worthless. Instead, we're going to share with you live results spanning over 3 years, and it's still running strong. So this is the real deal. Now, the software is going to turn your trading on autopilot, and it's going to likely be more profitable than it ever was, even when you trade it manually. Now, I know you can't enjoy staring at charts all day, and I know this because I used to do it. I would spend 16 hours a day, and it's no fun, even if you like to trade in general. So this software is going to free you from the need to stare at charts, and it's literally a set it and forget it scenario with TomZA. First, before I discuss the real world trading results, it's important for you to understand how strategies are typically brought to market and sold. Now, it's unfortunate, but the reality is most companies will spend anywhere from 6 to 8 months or so working on a strategy with the sole purpose of marketing the strategy. All right, they focus mainly on optimizing it to backtest well, and then they add some bells and whistles to make it look attractive to a prospective buyer. Now, the problem here is backtesting is pretty much garbage, all right? When it comes right down to it, it's just not worth it, all right? And the strategies rarely last through the first major market swing. Now, the reality is that the entire purpose of these strategies and their existence is really to sell them, which means the results, especially live results, are secondary to the marketability of the strategy. Now, I don't operate that way. All right, I've been doing this a long time, and I can see a bogus strategy a mile away. Now, on the other hand, I have a real knack for finding the good stuff. And for some reason, a really good strategy or a piece of software, it stands out to me. So instead of trying to create a strategy with the sole purpose of selling it, I'm always on the lookout for a good, solid strategy that's already working for someone. Now, these strategies are typically very low profile. They've got very few traders using them. In fact, most cases, it's just the developer of the strategy and any managed clients that he or she may have. And really, those are the only people benefiting from these strategies. So once I found a winning strategy, I build training and support around the strategy, and now you've got the makings of a good product versus some crap that someone threw together with the main purpose of selling you. All right, and that's what's being made available to you today is a product that was developed in a completely different way. All right, in a way that a fund manager develops a product in order to manage his fund. All right, now the software is based on Tom's personal trading strategy, which he's been fine-tuning for many years, and I'm actually going to have him explain in a moment. But first, I want to stress that this is the only FX robot, or EA, so to speak, that I know of that was created by a professional fund manager who now runs a Forex brokerage. So before I bring out Tom, I want to go over some stats with you. Not to show off, but first, to be as transparent as possible. All right, I want you to know exactly what you're getting into. And second, to show you that TomZA produces excellent results in real-world trading, not worthless back tests. All right, and third, perhaps most important, to show you that we've done our homework, unlike other folks out there. All right, the reality is most people don't have a clue where their strategy performs in all these different categories that we're going to go over. Serious professional traders, they know these stats, and any trader who's actively trading without knowing these types of stats, they're really fooling themselves, and they're just setting themselves up for failure. Now, when you know these stats, you can see where improvements can be made. So no matter what strategy you use, you need to know these stats, all right? And that's why we're sharing them with you, because you need to have the right data to make an informed decision. And as I said, transparency is my number one priority in this presentation. So now with Tom's software, these are the actual results from my personal account, which I opened up with just slightly under $10,000. Now, as of this recording, my balance is over $36,500, and that's a 262% ROI over 18 months. Now, that averages out to about 14% per month. All right. Now, here are the results for 2011. Now, we actually turned down the risk level on my account after the first month, and that's why it levels out. However, this does give you an idea of how incredibly powerful this software is. Right? If you're willing to take on a little bit more risk, you can achieve a really high ROI. But We present this as a long-term strategy because all investors really should be thinking long-term. So just keep that in mind. If you've got a high tolerance for risk, you can trade more aggressively and potentially earn much bigger profits in a very short amount of time. In fact, you could potentially make back your investment in no time at all if that's your number one goal. Now, moving on, here's my personal results for 2012. Now, using Tom's software, we've since made some changes to which currency pairs we trade because we had a large drawdown in May. Now, this was due to a single currency pair, the euro pound. Now, we actually stopped trading that pair, and we've now set my account to run more conservatively. Now, we're aiming for a more modest 6% ROI per month. Now, we also decreased the risk level to the overall account to be more realistic and really just to have a better chance for long-term continued profits. Now, you aren't going to double your money overnight, but you could double your money every year. And with compounding, that can really start to add up fast. Now, moving on, let's take another look at some more results. Here are the results that we have for the first quarter of 2013. On this account, again, I've lowered my risk settings because of the crazy politics and the budgetary issues that we're experiencing right now. They're just making me a little nervous. So I'm playing it safe. Now, you might want to take on more risk, but I'm personally happy with how the account's doing, so I'm tightening it up a bit. But keep in mind that a 6% return every month can still double your money every year. And because of the magic of compounding interest, at that rate, believe it or not, a $3,000 trading account will grow into a $1.5 million account in under 10 years. So don't overlook the power of 6% per month. It can change your life. In fact, if you've ever wanted to be a millionaire and you thought it could never happen, you might want to think again. All right. Now, this is actually a general summary chart of the entire period. Now, notice the middle column. It has longs 1 and shorts 1, and both are right around the 70% win rate, which is awesome. All right. This image actually represents a snapshot of the entire 18-month period, so this includes the large drawdown we had due to the euro pound, and even with this drawdown, we still had incredible results. So just a fantastic strategy. Now, in this chart, we have a summary of the performance for 2012. Now, the year that we have all the data for, the only year I should say that we have all the data for is 2012, so we can learn a lot from this. Now, the other 3 charts on this page, or within this image, are specific to October of 2012. Now, I chose that month because it's a pretty typical month. Now, notice in the lower right corner chart for average holding time by currency pair, you're going to see that the Australian-New Zealand trades are typically open longer than any other trades. And, these trades play out on average 2.5 weeks. Now, the shortest average duration is the pound dollar, in contrast, which typically takes about 4 days. So this is just giving you an idea of the average trade time and really what you should expect when you get started with TomZA in your own account. Now, in this pie chart, you can also see a breakdown of how often each currency pair is traded relative to the others in October. So the pound is traded most because these trades typically close out much faster than the others. Now, the euro dollar is traded second most, and so on. Now, in the upper right, you're also, you can see the average risk-reward ratio by currency pair. And additionally, you can see the average trade length is about 3 days. So let me point out something very important here. And that's that these stats are compiled based over 3,478 trades placed. And none of it's theoretical, right? This is a real account, my own money, and my results. Now, my point is twofold, right? First, this has been thoroughly tested. And second, this is real money, all right? So real, I could go out tomorrow and buy a brand new car with it and pay cash, all right? And I'm not alone. Tom does equally well, as do many hundreds of traders around the world who are using TomZA. Now, because we want you to be fully informed, in addition to the data points and performance, it's only fair that we explain some of the logic behind this amazing strategy. Now, we don't have time to cover 100% of it, but we can definitely give you a pretty good understanding of the basic logic, and it only makes sense that I'll let Tom discuss the strategy himself.
TomZA is basically my manual strategy codified into software. As a trader, we always want to know what kind of market we're in, so that's what the software checks for. This is important because the software behaves differently during different market conditions. There are 2 types of market conditions, trending and ranging. We're going to look at both, but let's start with trending markets. Trending markets occur about 30% of the time, and they present us great profit opportunity, but at higher risk. TomZA is designed to capitalize on the range-bound markets. However, it's optimized to not only sustain extended single-directional moves, but actually profit from them. TomZA is loosely based on a martingale strategy, and here's why I say loosely based. The basic premise of martingale strategy is to double up on every losing trade and to build into positions that are going against you. For example, if you go long on the euro and it goes against you, instead of bailing out, Martingale says to double up and buy again. And once again it goes against you, you double up again and again and again. So with this strategy, only two things are going to take place. Eventually, you'll get your move in your direction, or you're going to run out of money. If the market turns around and trends in the other direction, you can make good money. So there's some validity to the martingale trading, but it can't be used in its raw form. And martingale is not a good practice if you want your account to live for a long time and see it continuously grow like I do. So my version of martingale concept does things a little differently. We stay with the same size lot 3 times in a row, meaning that we'll place 3 trades against the market, but we move the take profit closer each time we enter the trade. When the market changes, this strategy leaves us in a great position because the first 3 trades all get the same lot size, but after that each new trade we place has a larger lot size. So the newer trades are more powerful than the older trades, and one winning trade can compensate for 2 or even 3 losing trades. In other words, if the market reverses, 2 of the 3 trades we will be in profit, but 1 will be in a loss. But the net of the 3 is a profit, and that's what's important. I call that closing trades in a basket. I consider that just one trade. Now, it can start all over again, and we're not holding on to a losing trade. But what happens if the market does not reverse? Well, in that case, after 3 entries, we'll add another trade, but this time it will use a larger lot size again. It brings it take profit closer yet. Of course, the software doesn't arbitrarily enter after some number of pips. We're using an algorithm that's actually waiting to identify the market reversing. Then it enters a trade rather than just blindly entering based on some random number of pips. This strategy makes winning trades about 70% of the time. We know that it's not going to win each and every battle along the way, but we're winning the war, so as long as our month turns out good, we're happy. Now, this is important. About 3 or maybe 4 times a year, we get a strong trend in one direction with very little retracements. When this happens, most EAs can't handle it. They blow up. But Tom's EA understands it, and really, we expect it. So your account stands the highest possible likelihood of weathering storms and drawdowns. There are limits within the software as to the number of open trades, positions in the series. Once a stop is hit and a trade drops off, a new trade may enter at a later time. But the software will not stack trades indefinitely. There are limits to the number of stacked trades. We have done this to decrease the risk of blowing up accounts or incurring substantial drawdowns. When the market does turn, we close out that series. We may break even or have a slight loss considering the drop trade or trades, but as long as we're winning the war, we don't care about each and every battle. This is about as close to a true set it and forget it strategy as you'll find. So the strategy behind the scenes doesn't really matter. What matters is that it works over the long term, and we have proven that. When needed, we'll update the logic behind the software. However, in the 3 years, we've not had to make any trading logic changes. Now let's look at ranging markets, which actually are the most common. They occur about 70% of the time. We like it when ranging happens because that's when we take the lion's share of the profits with the least amount of risk compared to trending markets. The software is looking for both buy and sell opportunities, and we use a number of indicators to discover these opportunities. As an example, one of the indicators we use is the MACD. This barely scratches the surface of the logic within the EA, but it's a great example of one of the many criteria that's considered. Our algorithm is very complex and highly advanced.
Thanks, Tom, for that great explanation. Now, with this strategy, we suggest you only trade the euro dollar, the USD CAD, the pound dollar, and the Australian New Zealand.